On paper, FTX looked like the future of money. In reality, it was a trapdoor. In just days, customers rushed to pull billions out. Then the rescue fell apart. The balance sheet story broke, and the empire cracked. By November 11, 2022, FTX was in bankruptcy, and one of the biggest financial scandals of the decade was fully exposed. FTX sold itself as the smart, trustworthy crypto exchange. Fast, sophisticated, built by math geniuses. Sam Bankman-Fried became the face of that promise. Messy hair, t-shirt, billionaire status, and a public image built on genius and altruism. Celebrity endorsements, sports sponsorships, political access, and mainstream media attention made FTX look less like a risky exchange and more like the next financial giant. And that was the power of the story. If smart money trusted FTX, ordinary users assumed their deposits were safe. Here's the core of it. Customers deposited money at FTX, believing it would stay available for trading or withdrawal. But according to prosecutors, billions of those customer funds were secretly diverted to Alameda Research, Bankman-Fried's hedge fund. That money helped cover Alameda's losses, repay lenders, fund venture bets, buy luxury real estate, and support political donations. Investors and lenders weren't getting the full truth either. Prosecutors said the public image of FTX hid the hole underneath. FTX and Alameda were supposed to be separate. Instead, the wall between customer money and risky speculation was dangerously thin or gone. The unraveling began when reporting raised alarms about Alameda's balance sheet and its heavy reliance on FTT, a token created by FTX. When Binance said it would liquidate its FTT holdings, confidence shattered. Customers stampeded for the exits. Reuters reported about $6 billion in withdrawals over 72 hours. Then came the failed bailout. Binance briefly explored a deal, then walked away after due diligence. On November 11, 2022, FTX filed for bankruptcy. New CEO John Ray III later described an extraordinary failure of corporate controls and unreliable financial information. Bankman-Fried was arrested, extradited, tried in New York, and convicted in November 2023 on 7 counts tied to fraud, conspiracy, and money laundering. On March 28, 2024, he was sentenced to 25 years in prison. Prosecutors said he also faces forfeiture of more than $11 billion. For customers, the damage was immediate: frozen accounts, shattered trust, and in some cases, life savings erased overnight. DOJ said the harm was extraordinary. Lesson 1. If a platform is opaque about where customer funds are held, treat that as a flashing red warning. Lesson 2. If affiliated companies trade, borrow, or market against each other behind the scenes, conflict of interest can become catastrophe. Lesson 3. Celebrity endorsements and media hype are not proof of safety, because when trust is the product, your money may be the inventory.